Hey guys, welcome back to my channel and to another investing video which I'm really looking forward to sharing with you because I have just been on such a journey over the last few years in learning about investing, and I wanted to share 10 mistakes to avoid if you are new to investing, 10 mistakes for first time investors to basically not make the same mistakes as I have done, or just some mistakes that you may well be making. I have been investing for maybe 3 years now, and I have just been absolutely loving the journey that I've been on learning about it. This is not me, giving you advice. This is just my personal experience. I'm not a financial advisor, so make sure you do your own research. And this is just like general advice. It's not based on individual positions and situations. So with that disclaimer out the way, let's get into the video and share the 10 things that you should be avoiding as a first-time investor. So the stock market has been returning an average of around 7 to 9% over the last 30 years. And let me know, comment below, what is your interest rate on your bank account? I'm sure you definitely won't be getting that much interest. So it's highly volatile. So it's not somewhere that is a guaranteed place that your money's never going to lose money. It's going to be up and down, but there's ways that we can kind of negate that and make sure that we're not losing too much money. So if you're new to investing and you've no idea where to start, I've got a how to invest video, I've got portfolio videos, I've got my stock updates, everything like that on this channel. So hopefully you can start there and you'll be able to learn how to invest and my methods, how I've been investing. But 2022 is going to be a little bit of a change for me. I'm going to maybe do a video on this with my updated stock portfolio and the way that I'm going to actually change the way that I invest. So let me know if you'd like to see that video. But for me, the very first thing that you need to learn about the stock market and about investing is that you have to have your emergency fund first. That is something that you can't negotiate. Before you even try and invest in stocks and shares and anything else like this, crypto or anything like that, make sure you have your emergency fund, because you can't guarantee that your stocks are going to be worth the same amount of money if you need the money. So it's not a place to put in your house deposit. If you have watched some of my other videos, we've done other tips on how to invest in the stock market, but getting that emergency fund is just a non-negotiable. So until you have that, don't invest your money in the stock market. Okay, the next mistake that first-time investors make is that they're going to be rich millionaires overnight. This is not a short-term fix. This is a long game. So for me, I have different kind of investments, and I've done portfolio updates for you in the past. But for example, my bulk of my money, my stocks and shares ISA, I won't look at that for ages and ages. It's where I put my money to sit, and I don't expect it to do great things overnight. It's just going to sit there and it's just going to keep growing. And then I have my stocks as well, which is a different kind of method to my investing, but it's just not going to be making me a millionaire overnight unless you can have like £100,000 to put on something and it does really well, but you have to have that much money in the first place. So just be aware that this isn't a get rich quick scheme, it's for the long game. Okay, the next big thing to learn if you're a first time investor is to not be led by your emotions. So this means if you want to buy something because it means something to you, and maybe it's starting to drop and you get scared and you pull out at the wrong time, you're going to lose money like that. Or maybe it's something that a company that you used to work for and it's just been floated and you think, yeah, I want to invest in that. This is a business transaction. This is not an emotional thing. And you think, oh, I really love my Peloton, I'm going to buy some shares. That's not the right reason to invest. You need to do your due diligence, you need to do company research, and basically don't be led by your emotions. Does it make sense to make this investment, or are you buying it because it means something to you or because you're emotionally invested, basically? And the next tip to do to not make this mistake if you're a first time investor is to check it every day. So when you start, I guarantee you'll probably be checking in every day. How's it doing? It's going to be like this, potentially it'll be like this, potentially it'll be like this. It's not healthy to check them every day, and I used to do this all the time when I first started, when I was investing in individual stocks especially, because it's obviously volatile and it's going to go up and down, and I was like really obsessed with looking at the numbers. It's just not healthy. You're going to get overwhelmed like this. It's a good idea to keep an eye on things, check on the news and make sure you know exactly what's going on, but don't let yourself keep checking these numbers, because as I said, it's the long game. It's not something that you're going to be buying one day. You're not a day trader and then selling it that day. It's something that is on for the long haul, and checking every day can just lead to overwhelm. Okay, next mistake not to make if you're a first time investor is don't get caught up in the hype. Don't buy last year's winners, essentially. So you've seen something's doing really well, you'll jump on board right at the end and you're buying really high. And then what will happen is all the people that saw it coming and that invested when it was early on, they decide to sell, you're going to lose value on your stock. So you're essentially buying high and selling low, which is the opposite of what you want to do. So make sure you're just keeping that in check. Again, that goes within your emotions as well. If you see something doing really well, you think, I want to get involved in that. It's not always the right thing to do. So just make sure you are doing your background research. The next mistake is to spend too much money on fees, on transaction fees from these platforms. So I actually use, as I said, Vanguard for my stocks and shares ISA, which is a really, really low percentage fee. And also things like Freetrade. So I can leave you guys a link for a free share from Freetrade if you'd like in the description. It's a free share up to the value of £200 and you can do with it what you will. You can sell it, you can keep it, you can just literally have that and walk away and never invest again. It's free, a free share for you, and I also get one as well as a thank you for introducing you to the platform. But these have got really low fees for transactions. So really look into this and make sure you're not using platforms that are going to charge you ridiculous fees. The next mistake is to not diversify. You guys need a buffer if anything should happen. So even if you say, well, I am just diversified, I've got 5 stocks in electric cars or in tech companies, I've got 5 different stocks, so I'm diversified. But if anything should happen and suddenly like there's a big news story about how electric cars can't actually do this and they're really bad for our health or something like that, you're not diversified enough to ride that wave and to not lose your money. So something like index funds are fantastic for first time investors because it's going to track the top, say, 100 companies in the UK or the top 500 companies in America. So these index funds, they're going to track these companies and it's going to kind of negate any loss if one company goes bust. You're going to still have like 99 companies that are going to keep you afloat. And for me, I think index funds are brilliant if you're new to it and you don't really want to kind of know much about it. Just get something like that. It's going to track and it's going to, over time will make you money, and it's really, really easy to do. But just diversifying, if you are buying individual stocks, just gives you a buffer essentially if anything should go wrong. So the next mistake you could be making if you're a first time investor is not auto depositing money into your investments. I do this every month. I've actually just reduced it because I'm doing a no spend month this month. Loads of videos on that if you're interested on how to save money, make more money, and just maybe do a no spend period yourself to be able to save up for investing. So I actually cut it down to £100, but that is something that I just have as an auto and I don't even need to look at it. So it's always building on my pot in my investments without actually having to do it physically. And it's like one of those, just a bill basically. I just pay myself, pay my investments, and it's something that's just going to keep building, and it's in a good place. It's going up 35%, so I'm really happy. And with compound interest, after a whole blog post on compound interest, my website is lara.joannajarvis.com. There's loads of financial wellbeing videos, posts on there as well. Okay, so the next one is, and I have kind of touched on this already, is buying too many stocks, just different companies. And I will touch on this on my strategy in my next investing video, which I'm talking about how I'm going to change my strategy. I kind of went in and I bought loads of different stocks of loads of different companies because I like the look of it, and some of them have done really well. I did Next, that's up 100 and something %. I did Walt Disney World, that's doing so well. I did things like Tesla. I did lots of different stocks like that, and they've done really well. But I also did some bad things as well. I also did some bad stock decisions. So as I said, an index fund is a really good way of diversifying, and it's just like a really low risk, if you're a bit risk averse, option to do. So think about that as well, and don't spend all your money on buying lots of different individual stocks if you then can't buy the ones that are a bit more diversified with ETFs. Okay, the next one is to invest in things that are speculative, and that is things that aren't really proven. So things that could change, go up and down. You haven't really got a proven track record of this thing. You're basically taking a punt on it, which, can work and it can definitely make you money, but it's not going to be something that is a really good strategy to start with potentially, because it's not got a track record. It's not going to be something that's proven, and this could be anything from crypto to a brand new company. It could be like the cool, exciting thing to do, the way to go, but it's not going to be as stable. And another one is to not invest in your knowledge with videos like this, podcasts, websites, news articles. other videos on YouTube about investing. There's lots of information, and investing in yourself is really, really important, and it's just going to help you make financial decisions. Basically, learn before you jump in, but don't let the fear of jumping in stop you from jumping in. I hope you guys enjoyed this video. I really enjoyed making it for you, sharing all these things. These are the things that I've made mistakes I've made along the way, and hopefully it's going to stop you guys from making them as well. As always, I'm not a financial advisor. This is not financial advice. It's just what I've done in my experience, and it's just general advice as well. I hope you got some value from this video, guys. Do give it a like if you enjoyed it, subscribe to my channel, and even share it if you think other people will find some benefit in it. I'm going to see you really, really soon. I will share my updated stock portfolio really soon with you guys, and yeah, that's it from me. Have a good day, and thank you so much for watching. Bye.